Okay, so the jobs numbers are out for the month of November. The United States added 155,000 jobs for the month, while the unemployment rate held steady at 3.7%. This all in the backdrop, of course, of the stock market, which has been crazy. We have Rachael Aiken from Rockland Trust, thankfully, here to sort it all out. I kind of want to start with the stock market, if that's okay with you.
Sure.
How nervous should people be?
So I think at this point in the economic cycle and the market cycle, investors need to be keenly aware that volatility is normal and that they shouldn't panic, and they should rely on a long-term plan and a well-thought-out asset allocation and diversification in their portfolios to help guide them through this. The last thing you want to do is have investors sidestep the market because of being fearful. That said, some of the volatility that we're seeing is excessive. If you just look at the last 3 weeks during the holiday season that we've seen markets up 4.5%, down 4.5%, and then up 5 and 6%. So it's that type of volatility that's extreme that I think is making investors fearful.
You know, I worked at CNBC during the financial crisis. The fear in the markets doesn't quite feel the same, right? It doesn't seem to be. How do you compare it to 08 and 09?
So I think one of the main differentiators is we don't really have a bubble that we can point to. It's very hard to look at a market being this fearful when the economy is still on solid footing.
Okay.
And there's been a lot of talk about it perhaps contracting, but really what we're seeing is moderating.
All right, one last market question, then we'll get to the jobs report. You know, there's been a lot of talk about algorithms and computer-driven trading. How much of these big sweeps are just triggered by the computers?
I think you're definitely seeing these massive swings, perhaps more attributed to that computerized or algorithmic trading. There are key technical levels that you can point to when the market breaches them, whether it gets below a certain level or above, where these trades come on fast and furiously, and you see the market react not in 100 points, in 500-point increments.
Yeah. Okay, so 155,000, a little bit disappointing in terms of versus expectations. So in the unemployment rate at 3.7%, you have African-American unemployment at a record low 5.9%, but yet we have all these fears in the market. So where are we? You talked about the economy. Is the economy actually slowing, or are we still pretty robust?
You know, there's a lot of evidence that the economy is still quite robust. I think the jobs numbers is somewhat backward-looking. 155,000 jobs still puts us in a very tight labor market, and I think why we're seeing perhaps a few less jobs created is that it's harder to fill those jobs. Right. There's a lot of skills gaps that businesses can point to as to why they're not able to fill them. But along those lines, you see anecdotal evidence with manufacturing, non-manufacturing, and service sector PMI numbers that are actually expanding. And that's contradictory to the thought that the economy is contracting.
It's one of those weird things. Can you actually can people talk themselves into a recession?
Well, definitely. We've seen a lot of talk recently about the yield curve, which is just telling us what interest rates would be on. And to the layperson,
that's the short-term interest rate on bonds compared to the long-term?
Correct. Let's say 2-year bond to a 10-year bond, and talk about short rates, a 2-year bond paying more perhaps sooner than a 10-year bond.
And what does that mean?
And that's generally a predictor or a harbinger that there could be economic issues like a recession down the road. But one of the things that also needs to be stated in that is that historically that turn in the market and the economy is 12 to 24 months down the road.
Right. So the takeaway for investors who are watching from Rockland Trust is just don't panic, but don't be ignorant of what's going on either.
You have to be informed. It's in front of us. You're bombarded with a lot of information. But definitely stay invested. Recognize your risk tolerance. Make sure that your mix of stocks and bonds and assets reflect that. And obviously, we work very closely with our clients. We want them to talk to us if they are feeling edgy, because it is normal to feel a little trepidation with what we've seen in the market.
Yeah, give your portfolio manager a call. Rachael Aiken, thank you so much. If I don't see you before the holiday, have a good one from Rockland Trust.
Thank you.
Back to you, LaToya.